Hey traders, Nick here. Coming back from vacation and emerging from being sidelined with a massive migraine. Sorry, my voice is not back 100%. Okay, so I haven't done one of these in a while. Usually I do them once a week, so during vacation it's really hard to do and upload all of that, so I skipped them. Okay, so technically it's hard to short a chart that looks like this. This is the S&P, and if I zoom in on it, it looks like they want to, above this line right here, they should carry up higher. If you remember when we were in the 2750-ish or something like that, I said that we have a slew of setups that would get us to I shared a ton of levels, but then I identified for a while now 2822, which we passed several times and then we tested several times, and then I said that would lead to 2865. And then this morning I think I shared another level higher than that. But earlier than this also I shared an SPY 300 trade, which was kind of outrageous, but it was basically on the breakout from here. Technically it should fill this size gap higher, not gap, rally higher with time. So that all is still in play. So the only reason I would short this is if I have evidence of something that says, okay, no, the valuations are too high, you can't do this. And there's no evidence of that. I mean, Apple, even with this all-time high level, is still 20 PE. Google, not that far higher. Facebook, not that far higher. Yes, sure, Amazon, Netflix, all of those, but those are momentum stocks. I don't judge them based on profitability until they stop growing. While they're growing, I only judge them on how fast they're growing. And they're growing incredibly fast. Okay, slowing down a little bit here and there, but incredibly fast still nonetheless. So hyper-growth companies, I don't judge them on valuation. So I don't confuse the issue. The general markets are not bloated. This is not the year 2000 where we're chasing eyeballs. We actually have results. So in IWM, whoops, sorry about that. IWM is the visual to small caps. So small caps now short term, they're tight. And there should be a move higher or lower. And I'll share those levels in writing in the morning. So there's no evidence, clear evidence that we are completely bloated, therefore we should correct. We could correct, but we should also find footing and then continue on higher. Now we could have a blindside headline that we don't know about, but that could happen any day of any year. If I'm afraid of that all the time, then I shouldn't be investing in the stock market. I should stick my money in a mattress or in a CD that pays 1% or whatever they pay now. So this was the accident scene of the February correction. February 2nd. On February 9th, I said we bottomed, and it was an absolute bottom. We've tested it several times or came close to testing it several times, but everything held higher. So we've had higher lows, and now we've exceeded that level from which we fell. That was a big accident scene, and now we poked through it twice. Now, any dip, we should see if that area would be footing for forward higher prices. So I did trim some longs, but I left a lot of runners because I want to play with house money upside because I don't have a clear-cut thesis to say we're done. This is the high. We're not done. We shouldn't be done, technically speaking. This is the S&P. So this was the 300 scenario I shared a while back. So it's in play. No one can say no, it's not. It's that big arc, kind of a cup and handle, rounding bottom, higher lows, knocking on the roof, whatever you want to call it. We've crossed it, and we are pricing it out. So these are long runways. We could drop a little bit, but again, without any new evidence that we're like in fake money up here, or everybody's lying their teeth out, or it's been nothing but actual buybacks, I'm not going to try to short this market. The bear thesis is very thin without new scary inflammatory headlines. Okay, so Trump is bumping it up from 10% to a 25% tariff. I almost don't care because it's the same headline, only to the magnitude a little bit bigger. A lot of it bigger, but it's still not a crashing. How many fewer iPhones is Apple going to sell? I don't think it's going to make a difference in the Apple bottom line in the long term. It may crimp them for a little bit, but people still want their iPhones, and they'll find people who are going to buy them. That's just one example. So I don't get over exuberant, and I don't just short because we're so high. I get cautious. I trim. I roll. Like if I close Facebook, I'll reopen SPY. If I'm afraid, I don't go along the Dow because that's who's vulnerable. I don't try to catch cat, even though I think it's a good deal. to sell puts. But I don't want to argue with headlines that move like this in one day based on nothing. Actually, this was based on the CFO comments, so never mind that. But you know what I mean. So pick your battles, roll in and out of money. IWM is a basket of 2,000 stocks that have almost nothing to do with tariffs. So if someone is afraid, they want to hide in there. I'm balanced. I'm long a lot, but I'm also short this. That I've been short. Somebody asked me, why am I short this that doesn't have any tariffs? Because I shorted it like a year ago for balance, and it's still winning. It's credit call spreads that are up in the 1800s. So I have an eye on them, but so far they're still profitable, so I leave them on. They were iron condors, the credit put spread paid out, and now I'm still short the balance. So I am balanced. On red days, I do have greens coming in from those. On green days, those are suffering a little bit, but they're still winning trades, and I can close them at any point in time. All right, so Nick signing out. I just wanted a quick touch base, just quick note to touch base with a lot of new members as well. So if you have any questions, let me know. You know where to reach me.